as per usual, start with the stock of the day, and I chose carsales.com. It will buy another 40% of Brazilian online marketplace Webmotors for $353 million. It's in a bit of a trading halt to undertake the raising that will see its stake in Webmotors increase to 70%. The deal will see owner Banco Santander retain a 30% stake and continue its contractual relationship with Webmotors. Now, I do believe that car sales is back online. Let's get a view from our guests. Henry Jennings, Marcus Today. This is part of the global expansion. You know, considering that car sales already has a stake in this company already. I mean, so far so good in terms of execution, it does seem. What do you think?
I think you're right, Nadine. I think car sales has done an extraordinarily great job with their business, a great platform that they've managed to grow it, not only across Australia, of course, but South Korea as well, and Brazil. Brazil being, I think it's the 5th biggest car market in the world, 80 million vehicles on the road. And of course, owning 70% of this thing is better than owning 30%, as they say. This is the second kind of top-up acquisition. They did Trader Interactive in the US, which was a similar kind of business to theirs, that they had a big stake in the US. They raised money and took out the minority holders there. This one is a similar deal in that respect. Shareholders stumping up $500 million as part of this capital raise. It's a pretty good deal, I've got to say. It does look good. They've got a good partner in Santander, and they look after the credit side of things in terms of credit checks. And so that really kind of fits in nicely. Brazil is a big market. And as they say, car sales do tend to be somewhat immune to interest rates. You know, you may not go and buy a brand new Tesla, but you've still got to get around, and you're still going to buy the old banger. So as far as they're concerned, volume is good, activity is good. Whether you're trading up or trading down, that is good. So I think this is a good deal for the market. The market will like this deal. 70% is better than 30%, and I think they paid a reasonable price for it. So ticks lots of boxes.
But would you buy carsales.com today?
I don't know about buy, but certainly hold. And in a market that's drifting lower and seems to want to go lower, I think this one will be a rock in a sea of troubled waters. So it's definitely a hold, depending on how the market reacts initially to the capital raise, because they haven't come back on yet. There may be an opportunity to pick some up at lower levels, maybe around sort of sub $22, but we'll see.
Yeah. Thank you. And yeah, I was just checking. It's not yet trading. Okay, Andrew, what do you think of carsales.com? Buy, hold, or sell on the day?
It's a hold, and it's only a hold for all the, like Henry's done a really good job of enunciating why it's such a good business, and I agree. But given that it's at a 10% discount to the last market price, it's not unreasonable to think that some shareholders could in fact sell some of their shares, subject to what price it comes back on at, and use those funds to help finance the buy at $19.95 with no brokerage. Heaven forbid. So from my point of view, that is the only reason why the market just needs to sort of get used to that indigestion. The deal will fly out the door. Because it is very well priced. Management have got a great track record, and they're pretty smart, Nadine. They don't just go in and buy something straight off the bat. They sort of take a minority stake, see what it's about, and then go and buy it. So great business, but it is a hold.